Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes or for however long it takes, we'll be looking at Bitcoin, and we're going to be looking at both short-term and long-term counts and doing some geometry and some basic analysis, all the usual stuff. But first, I just want to say you probably noticed my absence on YouTube the last couple of weeks. It has been the half-term 2-week school holiday, so I've been very busy with family commitments. I also, unfortunately, my daughter was very ill during the first week with bacterial tonsillitis. She's made a full recovery, thank God, and my parents were down visiting the second week, so I really have not had time to get on with my work essentially. So this week I will be putting out a video every day to try and catch up, covering as many assets as possible. I'd also want to take the opportunity here to thank my patrons for their patience. I know I haven't been as available as I normally would be on the Discord, and I've got a lot of chart updates to catch up with, and also some questions that need answering as well, so I'm going to do my best to make myself more available there as well. So apologies, but normal service resumes from now. Well, at least until the Christmas holiday, but I think everybody deserves to put their feet up at Christmas. Anyway then, so let's get on with it and have a look at Bitcoin. Now, we will come in and have a look at the shorter term count here that we've been working on in my bullish count. We'll also consider the bearish option of the B wave top before coming down in the C. But there's a lot of talk going around in general at the moment about the typical cycle, the end of year in December, the expectations of a longer term top, and I just want to put some of those ideas to bed and express my own opinion on the matter before we come in and talk about the minutiae detail over here. And I think the best way to approach that would be to start with no count on the chart at all and talk through the very basic concepts from the longer term and the shorter term, get those all on the board, and then try and give them some, well, not specific rating, but some understanding of their probability or the likelihood of those occurring, and the kind of clues we can look for to help us decide which one we want to back, really, or if not back, then at least have a bias towards. Okay. Right, so the first one we're going to discuss that I've seen on the internet in several places. I've seen it on Twitter, I've seen it on YouTube, and I've seen people discussing it in the Discord and on other Discords as well. So, and that is the idea that we've topped. And I don't mean topped temporarily in the corrective structure of a B wave before coming down in a C in a wave 4. I mean topped, as in cycles over, this is 5 waves up complete. So this is the least likely scenario. This is not financial trading advice, as I point out, this is my opinion. But in my opinion, this is the least likely scenario. So this is the idea that we've got 1, 2. One of these is the 3, depending on whether you're using the expanding pattern or whether you're using the ending diagonal. It doesn't really matter since the 3 peaks in a parallel line with the 1, as you'll see when we come to use Elliott's channeling technique. So that's the idea that the recent high was a completed 5-wave structure up. So I don't think this is correct. Alright, so now that's great, Tom, you have an opinion, but what have you got to back it up? Well, first things first, before we talk about market geometry, let's just talk about wave relationships with Fibonacci extensions, okay? So, excuse me, bit of noise here, I just need to sort something out in the office. There we go. Right then, so the first thing I want to point out is the relationship between the wave 1 and the wave 5, and the wave 5 with the wave 1 and 3 together. So that's our usual typical extensions for finding the wave 5. We would take the length of the wave 1 and we project it from the wave 4. Okay, so this is assuming that 5 is roughly going to equal 1 as wave 3 was extended. This is very common, very common. So that puts the target for wave 5 up at, this is in log scale obviously, is completely irrelevant in linear scale, as the wave 3 did not extend to 1.618 or slightly beyond. It extended far beyond the 423.6. So we can't really look at these skewed prices and these hyperbolic and parabolic? Either way, parabolic, exponential markets in linear scale. We've got to look at them in log scale over the longer term. So here's the first target, which is 127.426.86, so 130k. That's the minimum I'd expect to see a wave 5 at. That's the minimum. Alright. So that's one target, so let's lock that down, and I'll save these as separate ideas so we can come back and visit them, because this is going to cover both why I think this is unlikely, and this is primarily still my primary count that I'm working on. I do have an alternate that we can discuss that I'm building up more support for over time, which is much more bullish. But, you know, there's no point jumping the gun. We've still got a doubling of price potentially ahead of us before we consider an even more bullish scenario, or on our way up we can consider a more bullish scenario. So that's the first measurement, that 1 equals 5. So now let's take the time of wave 1. Now, we don't have to have parity in time, but parity in price is what we'd expect. But let's just assume for a moment, that we get a similar move in time. Okay, so now, whether you take this as the truncated idea that you have a 1 that began here, or whether you take it from where I put it, which is back here, let's take the one I've got, because that's less generous. That gives the market less time to get to this high, okay, as opposed to another month or two. Alright, so this is where, in time, wave 1 would equal up here. So now let's just see if we get any kind of crossover here. So we're going to use Elliott's first channeling method, which is we're going to take the 1 and the 3 to find the 5. Now, we can't run a channel around this price action in log scale, purely because it will not adjust to the chart because of the skew in price. But a pitchfork will give us the same channel. But I'm just going to do, for a simple exercise, I'm going to take the peak of the wave 1, and I'm going to extend it out to the 3. Now, it doesn't matter which one you're choosing as the 3, because there's 1, 2, 3 lines all running as perfect peaks here in a line with one another. So here's our intersection to find the 5. Alright, so we've got our price and we've got our time, and they're all in, I'd argue, a very close proximity to one another. Right, so there's a logical place for the 5 to finish. The 5 will finish along the upper trend line of a channel projected from the 1 through the 3 to find the 5. That's Elliott's first channeling method, and it's the most likely in this scenario. So that gives us a price of around 130,000. And that's if this is the same primary degree, and that's if we only hit the lower target. Okay, so I'd say that's enough evidence already to suggest why the idea of 5 waves having completed here is very unlikely. Because look at how screwed up the relationship is between the 5 and the 1, the 5 and the 3 and the 1. The fact that we don't get anywhere near this upper bound, which I find very peculiar. So that's more likely, I think. So that's the first one we're discounting, that the idea that we topped in 5 waves. So for people who are calling the end of the cycle already, I think that's less likely. It doesn't mean that we can't have that B wave top and come back to new lows. We can, and they would probably be screaming they were right at that point, but that's because they're thinking what they're thinking and they're not thinking what we're thinking, or vice versa. This is the problem with putting the value of your opinion or wanting to be right ahead of the analysis, because, you know, it's just human beings. Doesn't make anyone better than anybody else. It's just who we are. You know, we're always going to do that. Try to avoid it, but we're human. So that's number 1. The next thing we take is the length of 1 and 3. We'll pick the highest peak. You know what? We'll pick my expansive peak instead in that case, in order to be less generous to ourselves. And we say 61.8. So 61.8 is also on the line up here. It would give us a longer wave 5, but it would bring us to 173,000. Obviously, if we were to take a higher peak, like the one up here, that extends out to 200,000. So let's give it the benefit of a doubt and say the extreme, the 65 of the 65 of this larger wave 3 high here, or this higher wave 3 high here. Is that the orange I used for that? Yes, it is. Okay, so this gives us a pretty broad range at that point for a potential target for a wave 5 alternate. So let's just, I'm taking the lower bound 61.8 of the lower high, and I'm taking the higher bound 65, sorry, not 1618, but 61.8 of the lower bound, and the 65 of the higher bound based off of these two peaks, this peak here and this peak here, and this gives us a box of targets around the upper trend line, around Elliott's first channeling method, right? This gives us an area of between 173,446 and 206,315, so 206,000, and that gives us a target box up here for our second targets for the wave 5. So this wave 1 extension at 130,000 and you know, all the way up to 206,000 are more likely wave 5 tops than this. Far more likely. So there you go, that's the first method, that's the first long-term option dealt with. So the next one is my own, which is this projection I've just made. We've dismissed the idea of the 5 being here. I'm not saying it's impossible, I would never say something's impossible, just say it's very unlikely. And then we've got the option that I'm working on, which is somewhere between 127,000 and 206. Not particularly helpful, such a large range, but all it's doing is aiming for this upper bound, this upper trend line, using the 1 to 3 to 5. That's it. And then using Fibonacci extensions and some relationship in time. Okay, there we go. The higher bound would likely be the result of the wave 4 here not being complete and having to come over here in order to give us time related to 1 and length, pushing us potentially higher, potentially further out in time. But then again, if we were to end up with a more extended wave 5 and more time on our hands to make it, we could have an even higher high, you know, and a more skewed relationship between the two. So there you go. They're the first two things. My primary count is this on the long term, these two targets, and we're dismissing the first idea, which is the market's topped and we're going to hell in a handbasket. So what I'm going to do is I'm going to save all this, and we'll call this simple long term 1, or we'll just call it simple long term because it covers both ideas, doesn't it? And if I want to do a simple long term 1, I can. Okay, so that's our first idea covered. So now on to another long-term idea. So we're just going to hide this now. This is my alternate count that I'm working on. I haven't introduced it yet, but I'll just give you an idea of it. I've mentioned the Uber Bull count. This isn't quite that big because it's not relying on the same super cycle primary wave extension into a wave 3. It's just working on an extended 3 at this current wave degree. Let me explain that. We still get the same 1-2 pivot here, but the 3 is not in yet. That's the idea. At primary degree, the 3 is not in. Okay. So this works on the premise that all of this is a wave 1 at a lesser degree. So as you can see already, this makes everything extremely bullish, much more so than our primary count, much more so. Because rather than saying 3, 4 at the same wave degree, we're saying 1, 2 at a lesser degree, which means we're going to push out this whole cycle. We'll have room for a huge bear market in this same wave degree. That's the point, you see, because well, I don't need to. I only need to look at more recent price history to prove that. Let's take the wave 2 correction here was 72.3%, so 72.3%, and still in a bull market, still in a bullish move up, but with a 73% correction. Now most people would misinterpret that kind of move as some kind of cyclical individual bear market. It's not. It's just a wave 2 at primary degree. So wave 4 at primary degree could be a big sucker, couldn't it? You know, and it may be 40, 50% even, significantly smaller than 2, but halving the price of Bitcoin up at these prices could be a pretty emotional experience. But you would, and that could probably play into the hands of the people who are saying, "Oh, well, there you go, another bear market in this cycle, or end of that bullish cycle." It's not. It's all the same thing. It's just a correction. That's all. So this is the idea that we've gone 1, 2. Intermediate 3 is going to be, God knows, a long way up here. We are working in log scale, remember, so they are going to get significantly smaller than each other. If we worked in linear scale for a moment, you'll see what I mean. So let's take the length of the 1, project it from the 2, and then project our 3 at intermediate degree in linear, and you'll see what I mean when I switch into log, why this is so different. So just based off of a linear extension of the 1 to find the 3, we'd be coming up to just below my primary 5 target, my initial count around 130. 4 is going to be roughly, so is that 127, it's going to be roughly 38% retracement. It's going to be roughly in that territory there, and then the 5 will extend beyond that. We're going to have to switch into log to find where we place the numbers. It's going to be roughly about there. And that would complete the 3. So you can see how even in linear scale, the 3, 4 and 5 up to here, the 3 would technically be longer than the 5 in linear scale, and the 5 would be shorter than the 1 and the 3 in this circumstance, and that would bring the wave 3 primary degree up to 190 odd thousand. Okay, now that's in linear scale, putting us at 2.618 here. In log scale, it's crazy how much higher this could go, and this is why, you know, it's an alternate that I'm working on, because I have my doubts. An alternate intermediate 3 would require a melt up similar to what we saw in 2017, and that would put us the intermediate degree 3 up here at 290,000, 275 to 290,000. Okay, then we'd have the 4, then we'd have the 5. Probably just beyond the 3, taking us up to the high 300,000s. Then you'd have the 3, then you'd have a 50% discount, bringing us way back down. Then you'd have the 5 at just 500,000 plus, maybe higher, I don't know. So here's an insanely bullish count. Super bullish count. But not as bullish as my longest, most bullish count. So there you go, this is the next alternate. Now how likely do I think this is, and what do I think is on the side of this count? The only thing I see going for this count, which gives me a moment of pause to consider it, is that we appear to have a completed wave degree into a 1 here. Okay, now what I mean by that is that the relationship, if we're assuming that this wave structure here is not the same wave degree as this wave structure here, like we have been 1, 2, 3, 4. Okay, so what I'm saying is, if we're assuming that this is not related to this, then there's far less likelihood that this correction is related to this at the same wave degree, because this is our 1, 2, 3, 4, 5 into a 1, right? So are we saying 1, 2, 3, 4? That doesn't look like a very nice fit. You know, it doesn't look like a very nice fit. I'm not saying it's not possible, but I'd argue that you've probably more likely got a 1, 2, 3, 4 here in the same wave degree, and that this relationship and this relationship are much closer to one another than this and this. And therefore, that's an argument to suggest that this move down is a wave 2, and that this is now a 3. Now, if that's the case, then we've gone 1, 2, 1, 2, 1, 2, here, 1, 2, and now we're in the 3 of a 3 of a 3. Super duper uber bullish, right? Off our way to just stupid numbers. So this one I'm going to rate as, if we're saying the least likely was the idea that we've topped in a 5, the most likely is the primary count I'm working on, which is the 5 is somewhere between 130 and 206. Then this one is more likely, believe it or not, I think, than the wave 5 having completed here, based on wave relationships and structure, but less likely than my own count that this is 3, 4 and we're coming into 5. So this is a viable alternative. I just think perhaps a little too moon boyish at the moment to be considering now. But let's have a look at some pitchforks for a moment. I just want to bring up the long term primary 1, primary 2. Okay, 1, 2, 3, 4, 5 in my original count. Now what I find curious about this, guys, and why this other count that I'm looking at also picks up some, what's the word, some validity, is we don't make it to the top of the pitchfork, don't have to, right? But because the pitchfork is projecting the wave 1 and the 2 pivot, we're not joining the 1 and the 3 to find the 5, we're just placing it, an original pitchfork, off of this pivot. So that's giving us a different upper bound. We never made it to the top of this upper bound, okay, and we never made it back to the bottom, even though that wouldn't have invalidated price with the wave 1 here. We had a shallow correction around the median line and the 23.6 here from the median line. So that gives me a feeling, and it's no more than that, that this correction is not the same wave degree as this correction, and that something bigger will come later. How much later? Well, we're projecting along a linear progression, so it could come much later. We could go like with 1, let me come back here, 1, 2, 3, 4, 5, right? Taking us, look, this is over like 500,000, this is almost up to 1,000,000, and we're still inside the pitchfork. Or is it far more likely that we would come up to somewhere maybe up to here for the 3, 4, 5, then have a primary 3, then a 4 to the edge of the pitchfork, right, then a 5. You see how there's so much room to play with here? And because we haven't had a deeper correction yet, which is the next thing we're going to discuss, this is actually a viable option. Less likely than my initial one, I would argue, but we're going to save this as... Have I got this one? I think I have got this one as... Bear with me one moment. Yeah, so it's basically covered by the Uber ball count, so we don't need this. It's just the largest wave degree changes slightly. So that's the next long-term count. Moon Boy count. Okay, if you like that, I don't blame you. Who wouldn't like that if you brought Bitcoin? Okay, so now we've covered the long term, let's come into the shorter term and talk about the possibilities of what this is. We're going to stay here in this time frame though in log for the moment, because the most obvious one we need to consider is that we have done 1, 2, 3, but we haven't done 4 yet. So let's bring back our pitchfork. Now this one is, in my opinion, more likely than the first count we looked at, which was the completed primary 5. So we'll weight them all in the end and we'll make a list, shall we? So here's the first one we dismissed, that we've got this really funky short 5 related to everything else. We think the 5 is going to be way up here near the top of the pitchfork, or near the top of the channel at least, we're talking about, and that the wave 4 is either here and done, or it's not done. So this is the next option. This will result in a huge correction but still keep us bullish on this bullish path. So this is the idea of an A, an expansive wave B, and then a C down to a lower low. Okay, so maybe somewhere at the edge of the pitchfork here possibly. Now I don't know how long this would take to happen. It could take months, it could be the new bear cycle that some people are talking about, it could take us well out into next year, or we could have a running flat on our hands, okay, and not have to come down to a new low. We could have three small 5 waves down the sea into a running flat, okay, and then continue on, or we could come down just to breach the previous lows, or maybe a little lower, maybe into the high 20s, and then push up from there. This is the next option to our own bullish count, which is we've got 1, 2 and 3 in the same place, but 4 isn't here, it's over here, and this is a B wave top as a 3 wave move, and it's going to screw us all up. So we've had this 3 wave move, this 3 wave move, and now we're going to have 5 like that in a flat pattern. So this is the alternate bearish count, and I would have to weight this as having a higher probability than the 5 having finished here. So if we have topped, it's more likely a B wave top than a wave 5. So it wouldn't be the end of a new bull market of 5 waves complete into a massive 1 into a much deeper 2. It would be the C wave of a 4 that's yet to play out, which will be significant but nowhere near as deep a sell-off as the completion of a higher wave degree 1 would be. Okay? Or a higher wave degree 3, or whatever it is your count supports over the long term. So let's come in and have a look at these options on the smaller time frame. We don't need to do this because we've already got the bearish case here, and we'll come in on the, we'll bring up the rest of the count now as well. That's the bullish count, that's the low. Okay, so let's just zoom into all this. Alright, so here it is expressed in the shorter time frame. I kept it simple because there's all we're saying here is a zigzag in a B, right? In a C of a B. So we've gone 1, 2, 3, 4, 5, A, B, C, B. 1, 2, 3, 4. Maybe pushing up into the C up here to find the B. Maybe we've done it here. 1, 2, 3, 4, 5, and the C's complete, and the B tops in. And now we're looking for 1, 2, 3, 4, 5, 1. 1, 2, 3, 2. 1, 2, 3, 4, 5, 3. A, B, C, 4. 1, 2, 3, 4, 5, 5. Coming down to lower lows. Okay, I don't think it would have to be this low. I think that would even breach my long-term pitchfork. Okay, so that would be extremely bearish. Okay, so that's the long-term counts all considered, because this would be 3 into 4. So now let's just clear this again and talk about what we're looking at. I'll keep that one. Get rid of this. Actually, we'll get rid of everything again. Let's talk about the short-term options, right? We've covered the long-term, and a lot of people are concerned with what this is. So we've already said one of the clearer ways of looking at it would be a 3-wave pivot into a B. And then we're going 1, 2, 3, 4, 5, 1, 2, 3, 4, so on and so forth. That's not my own count. I prefer the idea that this is a 1 and a 2. So let's run down our options here. Assuming, and we are going to make the assumption for a moment, that this back here is wave 4 low. This is the 3, and we've gone A, B, 1, 2, 3, 4, 5, and we had a flat pattern back here. Okay. Another alternate count to that is that this is the 3, and this was an ending diagonal. Okay, and we've gone W, X, Y to here. I honestly don't think there's much to separate them in terms of their structure and the look they have. I'm not fond of either, to be absolutely honest. You know, but we've got to work with what we've got. Either way, we get a completed 4 down here. So we can either say that we've gone 1, 2, 3, 4, 5. Okay. Okay, and this would be in minor degree, going up into an intermediate wave 1. That's right. So let's just bring that up here as well. So 1, and then we're going to get some kind of 2, 3, 4, 5. Off we go, much higher. Alright, so let's look at this one first. Let's just delete this 4. We know that's the low we're working off. And let's go through the same procedure we just did over the long-term time frame. So the first thing we're going to do is let's just come off log. We're working in smaller time frame here, much less skew in price, but still significant. So we will look at both, but I think it's at least worth looking at linear in this scale. So let's have a look at the relationships here, assuming this 1, 2 pivot. Now you could count this as 1, 2, 3, 4, 5, but then I don't think you've got any option other than counting this as a 1 and a 2. The only way we're going to get this as a 3, 4 potentially is if we count this first move, this first pivot to a higher low as a 1, 2. Anything else will be this is a 1, 2, which is my preferred count anyway, just off of this low here as a separate wave degree. But let's just run with this for a minute and see how nicely it marries up, or if it marries up at all. Now we're not using this pivot, this is a B wave pivot, we'd be using this here. Okay, bring the 1 back to here. Now the 3 extends beyond the 1618, the 2618, doesn't quite make it to 3618. In log, it makes it exactly to the 2618. Okay, so in log scale, accounting for a long wave 3, significant skew in price over the shorter term, we hit a wave 3 target in log, and we could live with that and say, alright, between the 2618, 3618, or to the 2618 in log, it's a big wave 3. It's extended, it's big, but it fits in a target zone. It fits. We find it somewhere around or in between where we'd expect to find a wave 3. So 1, 2, 3, nice so far. Now let's check the depth of these corrections. So from the 1 to going backwards, you plonker. From the 1 to the 2, let's bring up our usual fib. We get a 90% correction. 89 in this case, but a little tick over, so a 90% correction in the 2, so bloody deep. Really, really deep. And for the 4, we get more than 50. In log scale, exactly 50. In linear scale, more than 50. So yes, it's not as deep, and yes, it has different form. A, B, C expanding, A, B, C zigzag. So far, very deep correction, shallower correction, flat, zigzag, alternation. Similar in time consumption though. No real difference there. In fact, 4 may have been shorter. So it's believable from a Fibonacci point of view. This is quite deep though. For such a deep 2, one wouldn't expect over 50% in a 4. It is technically shallower than the 2, but if you're going to give up 90% in a wave 2, you'd expect a more typical wave 4 target of 23.6 or 38.2 would be the more likely. So if we just run up, so we would have expected somewhere 38.2, 23.6, we went through to 50. So that strikes me as a little, rather than saying, well, this is shallower than this. Yes, it is, but it strikes me as just 2 deep corrections rather than 1 deep and 1 shallow. Now, we're not always going to get all the alternation we want all the time. Okay, so Fibonacci-wise, it's believable. Now, here's the Fibonacci problem. Here's the Fibonacci part which is not believable, and I think works extremely strongly against this idea. And that's the idea of taking the 1 and projecting it from the 4. Okay, here's the wave 5 target, which would have been massively truncated below the 3 if it had hit. Very odd, very unlikely, very peculiar. So what does it actually extend to if we take the 1? I should have left that up and we projected from the 4. Okay, the wave 5 would extend to 361.8% the length of wave 1. That's a very peculiar extension for a wave 5. Very odd. And if we were to look at the length of 1 and 3 projected from 4, so let's do that and be as generous as we can for that wave 5 target. Here's the wave 5 target under these circumstances, here, and we've pushed higher still and gone beyond 100%. So what have I just told you? I've just told you that wave 5 is longer than wave 3. Wave 3 is longer than wave 1, so that's okay. But we got a 261.8% extension in wave 3 in log. Alright? And more than that in linear between 2618 and 3618. It strikes me as a little peculiar that we got such a hugely extended wave 3 and then wave 5 extended beyond wave 3 as well at an even greater degree. Okay, so bigger than the wave 3. You see, gone beyond the 100%. In log, not quite 100%. In linear, it's more than 100%. So that works against it. The next thing I would argue working against it is market geometry a little bit. Now, this is a bit of a double-edged sword, this is, because what I'm about to support in one end can be dismissed in another. So bear with me and try and find it. Okay. Alright, so here's the pitchfork here. There's an argument to suggest that all of this is contained inside of this primary pivot, inside of this minor wave pivot 1, 2 here. 3 and 4, although we do break the outer bound of the pitchfork, we stay within the extreme outer bound. Then we rush back to the highs where we find resistance, and then we come back into the pitchfork again. And now all we're doing is bouncing around the median line. Okay, so 38.2 tag here, median line, median line, median line, and we're just finding support here. It looks okay, I guess. I mean, I'd like to be able to pick at it, but it's permissible. It contains price. Market structure does appear to have been influencing the whole thing, like the pivot around the median line here, the resistance here, the support around the median line here again. How's it look in log? Now in log scale, it doesn't look half as good. We came right down to the extreme outer bound, got back into the pitchfork, come out, tested it again. This looks more like something that concluded up here, at a smaller wave degree, but I don't know. This one is going to remain as an alternate to our normal interpretation because it is still viable. It's still viable. So before we walk off from this one, let's put some retracement targets in place. So if this is a 1 into a 2, anywhere between the 38.2 and the 61.8 would be enough to completely smash this market structure, I think, and therefore give us confirmation of this wave degree having completed. So here's a 38.2 outside the outer bound, here's a 61.8. Any move down to here completely breaks this market, this channel here, this pitchfork, brings us down into the 50 to 61/8 of the golden ratio, gives us a chance to reset into a 3. Okay, so that's what I'm going to put down here as a target. We'll say 50, and we'll say the 61/8. Okay, so now we really are stretching time at the moment. I know, but like I said at the start, I will timestamp this, and I know some people in the YouTube comment section are like, oh, you should do shorter videos. Well, fuck off. I'll take as long as I need to explain what I want to explain. Alright, if you don't like it, go watch a cartoon or something instead. Alright? We're going to try and cover as much as we can. When I think it's necessary. Okay, so let's put our 2 price targets down here. So if this count is correct, let's just save all of this as, because it's a chance to tidy up the chart. Okay. This pitchfork can go back to hiding. Okay, so things 4. Market structure looks pretty good. Like Google the actual geometry. Let's take Elliott's first method of 1 and 3 to find 5. That looks pretty good, doesn't it? 1, 3, 5. It's close enough. So yes, there is an argument that this could have completed into a 1 up here. What don't we like about it? The 5 is longer than the 3, and the 3 is massively longer than the 1, making the 5 unbelievably disproportionate to the 1. That's the one thing I do not like about it, and it bugs me more, I think, than the market geometry in support of it, and that's why it's my alternate. So let's now look at my bullish count in detail, as we're used to looking at. This is still my preference. This is still my preference. So, actually, you know, there's no point looking at the detail if we're doing everything simpler. Let's break it down. So we get 1, 2. That's the same. But up here we get 3, 4, 5. Now, this is a deep and long wave 2. Right, we've already discussed that. 90%. This is short and shallow, wave 4. Now this is true alternation in form, length, time and depth. Okay, now you don't have to always, you won't always find that, but I prefer this being the same wave degree. If I do channel off of this, so if I take the wave 1, I take the wave 3, I come down to the wave 2, and I drag this forward in time, we can see that you can get the 1, 2, 3, 4, 5 in here, and then we break this channel completely, and then we start a new wave degree. Alright, so I prefer this idea, because we still get a pretty extreme 3 around the 2618, but our wave 5 is now much more believable from before. In fact, I think I've overshot slightly. We get almost to the tick, wave 5 equaling wave 1. So we get alternation with 4 and 2, we get a typical extension in the wave 3, and we get a nice relationship between 5 and 1. So this all feels like one wave degree to me, 1, 2, 3, 4, 5 into 1. And that's why I prefer this better. The Fibonacci relationships are just cleaner. We then get a nice clean zigzag into a 2. Now another thing I want to point out why I think I prefer this. Let's just channel this whole thing for a moment. Is it going to let me do this? No, I don't think I'm going to get away with this. Let me try it in log. Okay. keep flip-flopping here, don't I? Because I keep sometimes I look at a piece of market geometry and all of a sudden I'm like, actually I quite like the look of that. Okay, so let's take this channel for a moment. And let's discuss the B wave idea for a moment, the idea that we're topping of the B. This is a piece of evidence I would argue that goes against it. Either way, for both impulsive arguments are probably more favourable to the idea of a B wave top when we consider what I'm about to consider. This is the 1, 2, 3, 4, 5 into a 1, or 5 into an A for the bearish count. Let's take shape of this from top to from bottom to top, this, and then let's take this. Whoops, a daisy. Let's try that again. To the top, to the bottom, to the top. And let's ask ourselves, remove the channel, and now let's just look at this and ask ourselves if that looks like an ABC. Let's come off of log. There you go. We need to be in linear for this. Does that look like a typical ABC wave structure to you? I know this is really simplistic, saying is this ABC? Well, let's just look at the characteristics of this free wave move. Long sloping A, short violent B, acceleration in a C? Seems a little peculiar. That does. I would argue that a counter trend corrective move ABC zigzag would show the opposite. It would show a more severe A and a shallower, more drawn out C. We've got the opposite here. We've got a very sudden and violent C, as we just discussed. Put it back here, you see. Alright. And a very long and meandering A. So this for me supports the bullish idea that this is 1, this is 2, and then this is an acceleration in a 3. We are accelerating, we are picking up pace, we are going more vertical, and we're doing it faster. So from a pure, what we'd expect to see, I like the idea that this is 1, this is 2, and now we've entered a 3, and the overall structure of this move seems to support it. It's more severe, it's more extreme. It doesn't look like a typical zigzag, does it? Okay, so that's one more point in the hat, or one more feather in the cap of my typical bullish count, or my primary bullish count, which is this. So now we've done all of that, and I'm not saying the alternate isn't possible. It is. We've seen the geometry to support it. We don't like the Fibonacci relationship. Okay, so now finally, before we leave and go and do some basic technical analysis, and I know this has been a really long video, folks, and thank you for putting up with me, but I just wanted to go over everything today. So now we've got the other question of, if this is 1 and this is 2, is this 3, 4, with 5 to come, or is this a 1 and a 2 of a lesser degree? Right. Once again, let's clear things up. Let's do the same exercise again. So, 1, 2. Seen some people calling this 3, 4, which means 5's about to happen, which means we're about to top out in a larger wave, right? Before correcting and then moving on. So let's just have a look at what we'd have to see for this to be right. We're in linear scale first. 1, 2. Okay. So the 3 is longer than the 1. The 3 comes up longer than the 1. And that's because of this long meandering 1, short 2, steep 3. Doesn't look it, but because of the severity of it, it has made itself longer than the 1. So it's a legitimate 3 so far as it's not going to be the shortest wave. It can't possibly be shorter, because even if 5 was longer now, 3 would still be longer than the 1. Bit funky geometry, a bit funky shape going on here for this to be a completed 3, but nevertheless it's done enough. It's gone beyond the 100%. It did fall very short of expectations though. Here's a 1618 up here. That's where I'd expect to find the 3 as a minimum. As a minimum, normally in these markets, exponential crypto markets, I expect to see 3s be the most common extension and to be pretty extreme when they occur at all wave degrees, and I think historical price action backs me up on that. So that's the one option. 1, 2, 3, 4, 5. I don't think that's particularly likely. We didn't come to a typical wave 3 extension. The wave 3 doesn't have a very nice relationship in terms of time to the wave 1. The wave 3 would have completed in a fraction of the time of the wave 1. If this was 73 days from the low, let's have a quick look. To the high, sorry, it was 76 days, and the 3 would have been complete. A larger wave going to a higher target somehow completed in 29 days. I don't like that at all. I don't like that at all. So the idea that this is 1, this is 2, this is 3, that doesn't look right to me. You know, this seems that it can't be the same wave degree. It's technically possible from a Fibonacci standpoint of view, but this looks like an acceleration and therefore a subwave of a larger 3. So that leaves us with the next point, which is also my count. So you can see what I'm doing. I'm basically working you through why I've got to the count I've got to, trying to consider everything that I consider along the way. Okay. So if this is 1, 2, then I think this is 1, 2, 3, 4, 5 of a lesser degree, and we're just doing another extended 3, which will go much, much higher. Now that we've done that, we've eliminated all other options, so there's only one question left now, which is this 2 of a lesser degree complete? Right then. So we have 5 waves up here into a 1. I think we can agree that. There's clear 5 wave move up into to call this a 1. Like we were just saying, we could call it a 3, but we've dismissed that because we don't like the extension, we don't like the shortness of time. Right. So we think this is a wave 2 of a lesser degree. Well, the only conclusion I think I can make from here is I don't see very impulsive price action off of our proposed 2. Do you? Okay, so we get a clear 3 wave move here. Right? We've got a couple of liquidation spikes all over the bloody place lately. And it's not just here on Bitstamp, I've seen it on several places now as well, so it's just one of those things we have to live with. But we get a move here into a potential 2, but I would argue that this here, whatever it is, doesn't look particularly impulsive. This still looks corrective. It could be a 1, 2, 1, 2. It's a bit odd looking if it is, but it could be, I suppose. I don't think it is. My hunch is that the 2 is still not in. It's just, and that's all I've got to go on at the moment. So let's look at what we've retraced now for a likely 2. 38.2% in linear. 38.2 is pretty shallow. In log, we've only gone through the 23.6. We haven't made it to 38.2. So for this to be a completed 1 into a 2, this seems a little shallow. If we are going to create another wave degree inside of this wave degree, which is inside of a larger wave degree still, then maybe a bit more correcting is necessary. But it is, I guess it's possible this could be a 1, 2. We'll know soon enough. So if we go through this high here, then there's 2 options, just like there is on the larger time frame. We're either going bum bum bum, bum bum bum, dun 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 into a 2. So we're going to get a flat pattern like that. If we break down from here and we don't take out this high, we instead take out this low, then I think it's more likely that we're doing some kind of double zigzag. Zigzag here. That'd be some kind of zigzag here, zigzag here, zigzag here, maybe, taking us to a deeper 2. So come to this high, then we are either impulsive, and this is 1, 2, 3, 4, 5, in which case we will continue to accelerate higher, or it's corrective B, in which case we will reverse and come down in 5 waves. Or if we take out this low here, then it's likely a double zigzag. I don't think we can call it an ABC. It doesn't look like 5 waves in an A to me at all. This looks like an independent zigzag of its own. 1, 2, 3, 4, 5 A. 1, 2, 3, 1, 2, 3, 4, 5 C. So I think that's probably what we're looking at. It's either 2 complete, and a shallow wave 2, and some really dodgy non-impulsive action leading the way into a 3, which doesn't feel right to me. Just doesn't feel right. A 3 should start to accelerate. Okay? So that strikes me as a little peculiar. So W, X, Y, I think is what I'd be expecting. Okay, so now that we've covered all of those, let's bring up our count and let's see what I've concluded. W, X, Y, and that's still what I'm going with. I hope that has helped. I just need to find where I put the hell. What is? Oh yeah, the wave 2 needs to move to here. That's it. And the wave 3, which is going back in time, because I have a habit of just throwing numbers up here until I need them. Now that's what I think is going on. I could be right, I could be wrong. But all I've done is work through all of the options I can see and find the one that I think fits best. So I'm of the... What is this wave 1 and 2 here for? I must have left that as an alternative or something. 1, 2, 3, 4, 5, 1. A, B, C, 2. 1, 2, 3, 4, 5, 1. W, X, Y, 2. Expecting a retracement of between 38.2 and 61.8%. So in this box here. To come down, then we will find our wave 2 bottom and then move up in a 3. If we continue to move up from here, we get some kind of super impulsive action going higher here, then we can consider the 2 in its initial position back here. But I'm not convinced by this as impulsive. Okay, I've said it before though, haven't I? You know, that's when I flipped bullish off of this pivot here. My initial instinct when I was still tracking this correction was that this did not look impulsive, and then we did that. And once we took out these highs, I was like, yep, I'm bullish, let's go, until we take out these lows. I've been saying that over and over. So if we do something similar here, where we go bump, and we just muck about for a while, putting another low that isn't necessarily below this low, and then we accelerate, then I'll be considering the idea of the 2 being here. If we take out this low, then I think another zigzag down is far more likely, and we'll move higher from there. A move to a top, given this corrective looking action, a move to a new high, you've got to be suspicious of that it could be a B. Okay, and then we'll reverse into 5 waves down. That's it really, guys. I don't think there's anything else I can cover in the Elliott wave point of view. I will timestamp this video as best as I can for you to go through it. So now let's finish things up with our basic technical analysis and see what we can see here. Okay, so let's come out to the weekly time frame, throw up our moving averages here, zoom in on some of this stuff. Alright, okay, so what can we see? What can we see? Above the 10, above the 20, above the 60, above the 250, which are 10, which are yellow, blue, orange and green respectively, with our RSI set to a 10 close, with the green 30 level representing oversold, the red level at 70 representing overbought, and we have a MACD as a 10 for the average and a 20 for the signal. So what can we see? Found support at 60, I've discussed that multiple times. Come back to overbought conditions on the RSI, but not particularly high yet. There is the possibility we've discussed with the idea that this is 3 and this is 4, that the 5, when it comes, will finish on divergence. So we'll have divergence between... Well, that didn't work out very well, did we? We'll have divergence between the highs on the RSI and the MACD, but we'll have a higher high in price. It's quite typical of a wave 3-5 divergence, but not always in these crypto markets, as I recently discussed on a video with my patrons, saying how, you know, sometimes the wave 5 can be the FOMO wave and all readings can go completely off the chain. So if that were to happen and we were to come back above these readings in the RSI and the MACD, that would be uber bullish. And I think that would support the idea of this being 1-2, 1-2, big 3 coming up. So do we continue to push into overbought conditions and even threaten these previous highs? That would, I think, even give credence to the more uber bullish count I was talking about. But this is all conjecture. We've got our targets up here, we've discussed them. For the meantime, momentum is well above the zero bound of the MACD and trending positively, I should say trending positively to the upside. Okay, slight slowdown at the moment while we've been consolidating, but we are at overbought conditions, so perhaps that WXY into a slightly deeper correction before pressing on is to be expected. Okay, alright, on the daily time frame, What can we see? Supported by the 20 exponential moving average at the moment here. We've had a wick through, wick through, wick through. Closes here, but we've quickly got ourselves back above it. So a break of the 20 on the daily here, a significant break of the 20 could flush down to the 60. That would get that nice parity WXY. This could be an area of support here. Let's have a quick look at the volume profile here, see what kind of support. Got a big node in the volume here around the 60. This is also around that 38.2 Fibonacci retracement. Let's just have a quick look. It's between the 38.2 and the 50, so you could probably find support around here if we were to break down further. Let's just bring that back up. It is what I'm leaning towards. I could be wrong with the short term. I'm just not sold on this. I guess this could be 1, 2, 1, 2. If that's the case, we need to go now. We need to race now into a 3 and go higher, taking out these highs and smashing them. Okay, and we should see everything turn up. Momentum should turn up, volume should turn up, everything should support that move. This, however, looks a little corrective to me. So I'm still kind of expecting this to happen, as I've discussed. So we've cooled off a little bit back into the neutral zone. We've had some bearish momentum here with the sell signal here in the MACD. Still playing out at the moment. We had the crossover of the average through the signal and we continued lower. We've had some bearish momentum here, cool off, pick back up. Still well above the zero bound. So overall, still in positive momentum. We might move lower. So looking for a uptick in the RSI here and the MACD and to volume to support it and for a further move up in price. But if that doesn't come, then I think a move back to a zero bound on the daily time frame here would be likely. A move back to oversold conditions on the RSI here on the daily. Maybe we don't have to come all the way back down to oversold, but I think a significant flush down into support here, that could do it. We'll have to wait and see. Okay, I don't think there's much else to talk about really here at the moment. Everything is kind of just a sideways consolidation until we get a break higher or lower. We've discussed all of the options available with our Elliott wave counts. I did a video recently talking about indicators and how they relate to Elliott wave theory. There is no direct relationship in terms of them not being written for each other, but we can use the relationships in technical analysis to make certain decisions and to observe certain behaviour. I loaded that video up. That was a Patreon exclusive. So if you are interested in that kind of thing, you might want to consider signing up. So thank you for joining me on this technical analysis of Bitcoin. I know it's been a long one. If you're new to the channel, you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And before I go, big thank you to my patrons. Your support is always appreciated. And if you're interested in joining up, there's a link in the description box below. There's a whole raft of educational videos there that you can watch and enjoy, and a whole bunch of exclusive content which gets put out in perpetuity. Alright then guys, take care of yourselves, and I will be back with you hopefully with a significantly shorter series of videos over the coming week as we catch up with all the assets we need to cover. Alright guys, take care, bye bye.